What's going on, people? Welcome. Hey, Chuck. Hi, Maud. How y'all doing? You can see me and you can see my charts at the same time? Holy moly. Ray won't be able to be at the live trading room tonight. Ray will record that for you. We'll even record a recap for you. All right. Well, it's nice to see you here, Chuck. It's been a long time. I'm Rob Booker. Thanks for joining me today. I'm guessing Maud wants me just to get going. Is that right, Maud? I can just take it away. All right. So I want to talk about some of the opportunities that will exist in 2013. That's this year. It's the year of the squealing pig. I don't actually know what the year is, but I'm excited for this year because the trends are back. They're obviously back. We're finally moving again, and that means there can be some extraordinarily good trend and counter-trend trades. And I want to talk a little bit about those today, share with you some indicators that I use, and talk to you about just the basics on what I see going on. We're starting with the dollar-yen. That's the chart in front of us right now, the U.S. dollar, Japanese yen. I hate this currency pair. In 2003, I lost $50,000, and I'm rounding that off. It was like $55,000 on this currency pair. I lost a lot of money trading this currency pair in one day on intervention. It was my first major experience getting pillaged by the Ministry of Finance in Japan. So I have had a long-standing grudge against this currency pair, but I'm giving up on that. This is the year of forgiveness between me and the dollar-yen. When I traded that trade on the dollar-yen in 2003, it was actually a trend trade, and I still got smacked on a spike. Sometimes on intervention, it can spike in both directions. It was terrible. Terrible experience, but now I'm moving on. It's time to move on. And I would like to look at the dollar-yen, which has risen considerably over the course of this year. This is a daily chart on the U.S. dollar, Japanese yen. I'll take you through everything that I'm looking at. The number 2 that you see on my chart in 3 separate places represents a purple trade. A purple trade is a mix of the stochastic oscillator and the RSI. What the purple trade number 2 says is the market has reached an extraordinarily overbought position. And if it falls below the lows made when that overbought position happens, we can sell it. And if it rises above the highs of those candles, we can buy it with the trend. So we have had some extraordinary type 2 trades. All of them buys because we didn't reverse on these trades. All of them buy signals. However, when you get 3 type 2 trades in a row, it is an early warning sign that the market is ready to reverse. I am really, really close to wanting to sell the US dollar, Japanese yen. Let's drop down to a 1-hour US dollar, Japanese yen chart. And I want to show you this trade type number 2, which appeared last week. Well, I don't know if it appeared last week. Whatever. It appeared on February 3rd at 1 a.m. GMT. So it appeared this week. As soon as the market dips below this red line here, that triggers and turns on the trade type number 2. That would be at 92.45. And it's an opportunity to trade down to 90.30, 90.50 in that area, a retest of this black trend line converging with previous resistance and support on this daily chart. So the first opportunity of 2013 is a counter trend opportunity. If you don't like that, I'm going to give you a trend trade right after this. But that's the first one. That's a trade type 2. That's a purple trade. I teach the purple trade at tfl365.com as part of the course that I do there. It's a monthly subscription. You can do a free trial and learn about the purple trade today. Just go to tfl365.com. This is not a commercial, but I know you're going to have a question about it later. At the bottom of my screen, you see the Walton Strength Index. Wes Walton has worked with me for 13 years, and he is the creator of a strength index that measures the relative strength of currencies against each other. And the US dollar Japanese yen has sort of peaked out at a high recently and is ready for a bit of a reversal here. So all of those things together give me a sell trade at 92.40 with a target between 91.50 and 90.30, and that's the counter trend trade. Now, as for a trend trade, you could just say, I don't want a part of that at all. I don't want to do that, Rob. I don't want to be a counter trend trader. I want to be a trend trader. In that case, you could wait until we fall to 90.30, which is a retracement inside of this upward trend, and then you could buy the ever-loving crap out of it. However, I don't think that's a good enough price on this pair. I think I'd want to get all the way to 90. I would prefer to get all the way to the round number 90, or even all the way down to, drum roll please, 89.50. I would love to buy this currency pair at 89.50 with a very tight stop. I'm talking a stop loss in the 89, like a 50 pip stop, and then a 100 to 200 pip profit target. I think the first opportunity of the year, once again, is to sell the dollar yen at 92.40 or to buy it at 89.50. I like those trades. I'm going to take those trades live. I'm going to definitely participate in that movement. The next one I want to look at for 2013 is the euro dollar. This is the daily chart. No trade types number 2 recently. Just an upward incline that seems like it may never stop. This is uninteresting to me right now as a buy trade. Let me tell you why. Both the euro and the dollar right now are strong. Remember just a moment ago you saw the US dollar Japanese yen rising? That's dollar strength. Look at the euro. The euro is rising. So the euro and the dollar have both been rising against the yen. That means the euro dollar doesn't have as much potential. Actually, the euro and the dollar are both strong against the yen, which is the bellwether currency for good times and bad. And so, look, this is not a trade opportunity here. This is not an optimal trade opportunity for us on a buy. Definitely not. If anything at all, there are signs that the dollar is strengthening against the euro. You could see it creeping into positive territory right here on the chart. So let's take a look at a euro-dollar 1-hour chart and get a little bit more specific. I'll show you how a trade type number 2 works, and you can see it in action. On Friday at the non-farm payroll report, we had a purple trade number 2 come out before the non-farm payroll report was released. We didn't take it because it was right in the face of the non-farm payroll report. Then we had the violent, stupid reaction from the NFP, and then we dropped down below the low of the candle that created the purple trade. And that number is approximately 36.30. That gave us a sell at 1.3630. And now we're on the way down to support at 35.41. We're almost there right now. This is exactly the kind of thing that we're looking to do on the dollar yen, which I just showed you a moment ago. This is exactly the same thing we want to do on the dollar yen. We saw the trade type number 2. We draw a horizontal line to protect ourselves if it falls through it, and to show us where the market is ready for a sell trade. That's exactly what we want to do on the dollar yen. It already happened on the euro dollar. Now, if the euro and the dollar at the same time on the daily chart are showing strength against the yen, guess what the euro yen looks like? It's a rocket ship. On the daily chart, this thing is a rocket. It has been zooming upward since November, since October. It has been moving upward since August of last year. The euro yen is unbelievably strong, as is the pound yen. However, we're at the same point now. We've seen multiple trade type number 2s that have been very profitable and done really well as trend trades. And now we're entering a phase of the market where we just now saw a purple trade type number 2 up here in the upper right-hand section of my screen. That's a counter trend or trend move. If it moves above the candles that create the purple trade, it's a buy. If it moves below them, which it did, it's a sell. It gives us trades in both directions. It moved through the low at 125.80. That's a sell with a target at least 124. I'll write that down on my chart. If we move above, however, 127 even, this is a buy trade. And who knows where it would stop. 128 at the very least, we would go to the next round number. If we fall further, we're going to hit 124 on this currency pair. That's the target. But there's a trend line down here at the bottom of my screen. That gives us a second buy trade possibility on this. So I'm going to mark the profit target over here at 124. And I want to share with you a second buy trade idea on the euro yen. It is a buy trade on a touch of the 4-hour support trend line that you see on my chart right now, and I'll draw a green box around that area. There it is. If we can hit 120.30 on the euro yen, what a buy trade opportunity that would be. That would be a retest of support, and it would be a lot of fun. So we have 2 buy trade possibilities and 1 sell trade possibility. The sell trade possibility is on right now with a target of 124. A buy trade could happen at 127.10, and another buy trade could happen at 120.30, and that's a retest of that trend line down there. All right. I got a couple more currency pairs I want to look at, starting with the dollar CAD. Hope you are all having a spectacular Monday morning out there. That's euro dollar, don't want that. Here's dollar CAD. It's not doing anything. This pair, oh my gosh. Boy, this pair drives me nuts. While everything else seems to be moving, this seems to not be moving. And there you have it. A channel for the dollar CAD. The dollar is strong. The CAD has been weak. It hasn't been enough, though, to move it very far. It hasn't been that weak. And so we're just kind of languishing around on the daily chart. It's a really terrible setup right now. The dollar CAD is just pretty much a thorn in my side, a pain in the butt, all those kinds of things. Wrong template. This is the dollar CAD 1-hour chart. Switch my Walton Strength Index to the correct settings. All right, we're going to go US dollar, which is number 7, to the Canadian dollar, which is number 5, which is, set this to 35. And you can see updates about the Walton Strength Index on TFL365.com if you join as a member. This is the 1-hour US dollar, Canadian dollar. And you can see both are strong. You can see red lines and green lines above 0 here. So this is not an optimal trade just quite yet. But let me tell you what this shows, at least to me. What this shows right now is that the Canadian dollar is getting, well, I mean, it was strong, but it's getting weaker. you can see as the Canadian dollar moves forward, it's making lower highs. It's not as strong, lower and lower and lower and lower. And the green US dollar is coming up above the zero line, getting higher and higher. This could be the beginning of a nice trade upward after it broke this trend line on the US dollar, Canadian dollar. And there you have it. That's another trade I would take. I would take a buy trade on this at 99.70. Where would I put a target? You could put a target all the way up here at 1.0100. Boy, I love that target. It's about a 200 pip target. Excuse me, it's about a 100 pip target. 130 to be exact. So that's the US dollar, Canadian dollar. Let's switch this US dollar, Canadian dollar to the Australian dollar, US dollar. And now I'm going to switch the strength index down here to the Australian dollar, US dollar. That's a number 6 against a number 7. And we're looking at the daily chart on the Australian dollar, US dollar. You'll see here that not much. It's just they're really quite equal against each other in a daily sense, and you can see it's trading in essentially a very much sideways pattern here recently. This is not an optimal currency pair for daily trading. Now, if it breaks out of here, it could be optimal for short-term trading. So let's take a look at the short term here. At the shorter term, anyway. 6, 7, and we'll switch this to the Australian dollar. So here's the 1 hour Australian dollar chart, US dollar chart. The Australian dollar is getting stronger and the US dollar is getting slightly weaker as it comes down. So you could say, for instance, you could buy this on a move above this 1 hour trend line, 0434, for a target of about 40 pips. I would like that, actually. That I could get behind that trade. The last time we had a trade type number 2 on this was a billion years ago. We had a nice buy trade down here and a sell trade right up here. And we haven't had another type 2 trade for quite some time because we've just been going sideways on that daily chart, as I mentioned. So there haven't been very many trades. Let's look at the 4 hour chart, see what might have occurred. Nothing. Absolutely nothing. Australian dollar getting stronger finally. US dollar getting weaker. Yeah, I like a buy trade on that. I like a buy trade on that for sure. Profit targets on this include 0477. If you want to go a little bit further, profit target at 0523. Further than that, you're on your own. Profit target 0575. But I like 0477 as a first profit target. 1.0477. And there you have it. Questions, thoughts, observations, commentary, compliments, questions, ideas. Nice to see you all here. Thank you for joining us. I'm Rob Booker. I'm so tired because I got up so early today. No questions, so let's move on. Hello, Rob. Hi, Don. Hi, Francisco. Nice to see you here. Let's take a more exotic currency pair. Let's take something that most of you probably don't look at. Pound New Zealand. And we'll look at the daily chart to start. British pound is number 3. New Zealand is number 4. Oh, I'm so happy you guys like this. Yeah, that's great. Perfect. I'm so glad you like that. And then we can look at the pound dollar for Chuck as well. All right. So here you go, folks. Pound New Zealand daily chart. Wow. Just getting really weak. Pound's getting really weak. New Zealand dollar getting strong. That looks tasty. Wow. Okay, so that actually is an interesting setup here. Weakness in pound New Zealand. Does that weakness, I wonder, play through onto the longer time frame charts? Let's check it. Wow, it's even weak here too. Wow. Okay. What a downtrend. So here we are on pound New Zealand. What we would wait for is we don't want to just indiscriminately on this 4-hour chart. We don't want to just sell this without any kind of warning or retracement or whatever. We want to get a good price on this. I'm just going to move some things around. And what we would wait for is a move up to 88 even and then a sell. That's going to require some waiting, but it's better to take a sell trade on a retracement than it is just to jump into this. Well, I like that. Probably also see a move to 87.50. That seems really likely. Here's the number again, 87.50, 1.8750. You can see here on the chart, 2 purple trade types, well, 3 of them. Purple trade type number 2, purple trade type number 2, purple trade type number 2. I'm going to do a webinar on this in February, but as a member of TFL365.com, you get access to the indicator and the trading methodology as well. A trade type number 2 is not just a trend or counter trend method. It's both. When you get a trade type number 2, it's an early warning sign that if the market reverses backward down here, you sell it. And if the market goes above the purple candle that created the purple trade, you buy it. Yeah, Donji says that maybe pound New Zealand is ready for a bounce. That is absolutely true. Absolutely true. All right, let's take a look at cable US dollar. This is the daily British pound US dollar. 3 against 7. All right, looks like pound is weak, dollar is strong across the board. There's your daily chart. Downward trend line. Let's see if we can switch over to the 1-hour chart and see any kind of trade. This is British pound US dollar. This is a little bit tougher. Pound New Zealand looks a lot clearer. You can see here, in this case, on the 1-hour chart, both the US dollar and the British pound are weak. This leads me to believe that this is not the way to go. When you see a clear separation of the strength between 2 financial instruments, then it's a reasonable trade to take. But in this case, we don't really see that. You kind of see what I'm getting at? There's a trend line. We could possibly sell this at this trend line. We could possibly do that sell trade. That would be at approximately 57.90. But I don't love that trade. I'm not a huge fan. Pound's weak, dollar's weak on this daily. I'm not a big fan. Not a big fan. It's 8:30 in the morning Pacific U.S. time, 11:30 in the morning on the East Coast, and it is 4 o'clock in the afternoon in the UK, I think. Wow. Did I get that right? Pretty late there for you. Is that really true? It might even be 5 o'clock in the afternoon if you live in London. Well, wherever you are, I hope you're having a nice day. 4:30. Thanks, Richard. I appreciate that. Thanks for letting me know. I'm always interested to know what time it is. 4:30 in London. So that means that for Maud in Spain, it's past work time. It's past your work time. You need to be able to go home. 5:28. That's past the work time. Can't believe Maud's still here. She's here for an hour and a half more. I'll be right over. We'll bring coffee and donuts in, Maud. It should only take me 24 hours to get there. Maud will provide the Spanish jamon. All right, let's take a look at the purple trade. I'll give you a little bit of a preview of what that is. Why not? Okay, trade type 2 works for any financial instrument. Yeah, let's talk about this for a minute. Why not? I'm going to give you a quick preview of this. The rest of it is on TFL365.com. A trade type number 2 works for any financial instrument. Actually, even works for stocks, ETFs, indexes, and the like. Okay, here's what your setup looks like, folks. Take a look at this, get a screenshot, remember it forever. First of all, you're looking for the RSI to go above 70. Number 1, you want the RSI to go above 70. That's the relative strength index, set to 28. And I'm not going to repeat this. The RSI set to 28 is above 70. That's overbought. The stochastic oscillator set to 70, 10, 10 has a bearish crossover. The stochastic oscillator set to 70, 10, 10 has a bearish crossover. That produces a number 2. We sell on a move below that purple candle with the number 2 on it. And we buy above that candle. These setups can precede big moves, meaning changes in direction that go a long way. For example, there's a buy trade on Facebook down here at the bottom, and then it turns into a sell trade over here at the top. Here's another example of what they look like. A buy trade comes when the RSI is below 30. The RSI is set to 28. Then you get a stochastic crossover that's bullish. That produces a buy trade. Here's another example of buy trades. On Apple, the RSI set to 28 goes below 30 or oversold, and then we get a bullish crossover upward on the stochastic oscillator that produces a buy trade. Any time frame chart, any financial instrument whatsoever. And of course, you can get more information about the purple trade at TFL365.com. That's daily lessons and trade signals for traders who want to trade for a living. Trade for a living, 365.com, TFL365.com. Part of the lesson material on TFL365 is the purple trade, but there's a preview of it. You've learned the most important parts right there inside of this FX Street webinar. I know it's early, Maud, but I'm all done. I've completed everything that I came here to do. So if you have a few questions, I'd love to answer them. I work from, in this webinar, the daily, the 4-hour, and the 1-hour charts for a bigger picture view of what might happen in 2013. I trade live in the TFL live trading room with Jennifer from the 1-minute charts. So this morning, for example, we traded for an hour and a half in the live trading room on the 1-minute charts. And I'm happy to take questions from the group. So if you have a question, type it in. The best time frame for a type 2 trade, Ahmed, I am so glad you asked that. What a great question. Welcome here. I'm so glad you're here. Is the 4-hour chart. The 4-hour chart is exceptional with the purple trade type number 2. It is extraordinarily successful. In fact, I just finished a round of testing on that and the 1-hour charts and did very well. In fact, the 1-hour charts are the second best pair. Now, I'm going to find somewhere in here, in my Dropbox, screenshots for the purple trade. In this set of trades here, you'll see on my screen right now, I have all of 2000, I'm going to run through these. I have all of 2012 purple trades on the 1-hour chart for the euro dollar, 20 pips. No trade, so we're still at 20 pips. 20 pips, 60 pips, total 100 pips. No trade, so we're still at 100 pips. No trade, so we're still at 100 pips. We got another 20 pips for a total of 120. Another 40 pips for a total of 160. Another 40 pips for a total of 200. A loss of 20 for 180 total. A gain of 40 for a total of 220. And then there's just trade after trade after trade. It gets into November of 2012. Another winner for a total of 500. Another winner after that for a total of 540. Another winner after that for a total of 580. A loss to get to 560. All the way to the end, 35 trade on the 1-hour chart in 2012 and the beginning of 2013 for a total of 700 pips on one currency pair on the 1-hour chart. So I like the 1-hour and the 4-hour charts. These are all purple trade type number 2. And on TFL 365, we have the indicator for your charts and the rest of the rules as well. The question is, do I consider news releases? On a non-farm payroll report day, I will avoid a trade right after the non-farm payroll report comes out. But then after that, I'm perfectly happy to take a trade. So in this case here on the euro dollar, we had a trade type number 2 on the 1-hour chart. I didn't take it until after the economic release came out. And we traded that report live for the public. I know there's one on FX Street. Wayne McDonald does a great job of trading the non-farm payroll report. I also do the non-farm payroll report trading live with Jennifer and sometimes Scott also. And we trade that live as well in a webinar. And I took that trade, but I waited, Boyke, until after. And I trade it every day. I'll trade it any day that it produces a trade. I'm happy to trade it. The worst month of the year for most of the trading systems that I cover is August. I don't mention stop loss or risk management. Okay, so on the trade type number 2, once we took the sell trade on the non-farm payroll report day, right here, profit target goes above the highs. And the stop loss goes above the highs, and the profit target I did mention is a previous area of support, and I mentioned that for the dollar yen as well. Previous area of support, trend lines, and support and resistance levels. Chuck asks, how long have I been trading? 13 and a half years. And it's nice to see you all here. Thanks, Maud. I'm going to wrap it up now. Hope that I see you again in a webinar in the near future on FX Street. So grateful to Maud and Francesc and everyone at FX Street for asking me to come on today. I hope to see you again in the near future. Have a great time trading, everyone. Good luck and be safe. I'll be back on February 13th for a special pre-Valentine's Day webinar filled with love for everyone. And my website, for those of you that are wondering how to get in touch with me, the best place to go is tfl365.com. And you can also go to robbooker.com. And if you have not already, you can listen to the Traders Podcast at traderspodcast.com. tradethis.com. There's tons of free stuff on all three of those websites. The Traders Podcast is completely free, and you can listen to episodes twice a week. Thanks, Maud. I'm going to close out here. Have a great day, everyone. Thanks for joining me today. I really appreciate it. Hope you have a wonderful day.